Broadcasting live from Houston, from the space city to the world. You are watching Now Media Television.
Glad you're still with us. And as promised, our weekly segment, Tammy's Tax Tips, with our good friend Tammy Mayhale. She's going to be having a chat now with my good friend, our investigative reporter and the executive producer of Now Media TV, Mr. Juan Guevara. Juan, Tammy, how are you?
Glenn, thank you very much for having us on your show. And today, we're talking about taxes. And obviously, as you guys know, well, it's the end of the year. We're getting into the festivities, but it's happening a lot in the tax world. And one of the things that we want to bring you with Tammy's tax tips is very concrete content that you can apply to your business from this expert, Tammy Mayhale. Tammy, how are you? Thanks for being here.
I'm fantastic. I'm so glad to be here.
I'm glad. Now, you were telling me about something that is very important, which is end of the year stuff in terms of taxes. And one of the things that you were telling me is capitalization.
Yes.
Which I don't have a clue what it is. So why you don't tell us what it is and why is that important?
Well, first you need to have a capitalization policy. That's very important. Have a capitalization policy in place so you can expense items under $2,500.
Okay. So everything that is $2,500 or less you can expense with no problem.
Right.
Okay. And what is a capitalization policy?
Well, it's a document, and we have ones in our office that we use for our clients, and we just draw it up. It just says, basically items like, your pens, paper, your, let's say you bought even maybe a computer that's less than $2,500. You can expense it right away. You can write it off on your books.
So if you are self-employed, if you have an LLC, if you have a company, as long as you have that capitalization policy, anything that is under $2,500 or less can go in the books as something that you can expense out.
Right.
And you can deduct.
And if you have audited financials, you have a higher limit. So.
Oh, really?
Yes.
And what is the higher limit if you have audited financials?
$5,000.
All right. Now, one question though. So it's not a total of $5,000. It's any item in your office, in your company that is $2,500 or less.
Right.
Okay. Perfect. Now, again, we're getting into the last part of the year, and you have a lot of stuff. And also, we talk about depreciation, right, which is, I guess. See, I was good in accounting. I'm not a CPA, obviously. I'm a tech expert. But one of the things that I remember from school, which you are the expert, is that depreciation is important because it is the loss of value of an item over time, and that is deductible. So why is that important?
Well, you get a piece of the depreciation each year. You get to expense a little bit each year. So you get to deduct and have that write off against your income. So it lowers your tax liability.
Okay. So and that applies to LLCs, self-employed people, DBAs, and corporations differently? So each
same rules.
It's the same rules.
Same rules for any entity that's established, any business.
Now, one of the main things that I also tell everybody, and I think it's crucial, is to have a certified public accountant on staff, somebody that is actually an expert, something that you can refer to, because these rules you can get audited at any time for any reason. So I mean,
it happens.
It happens all the time. And one of the things that I would imagine is important on the work you do is to be able to have all the backup, to be, I'm not going to say you're audit proof, but you're solid on your arguments when you have to present backup to the IRS.
Most definitely.
Okay.
We want to be sure that when we do a deduction or take an expense or anything that we do, we want to be sure that we document and know that if the IRS should ask, that we can always defend what we do.
Okay. And there's one other thing that I think it's very important, which we're talking about depreciation, capitalization. What other expenses at the end of the year or things at the end of the year business owners should know about?
Well, right now it's looking at the end of the year and doing tax planning. And if you've got net income, we're looking at doing, maybe taking a Section 179.
What is a Section 179?
Oh, Section.
I don't know. Remember, you're talking to a regular guy.
Section 179 is a way to write off your capital assets.
Okay.
So you could write off, your office furniture, office equipment, heavy equipment, some leasehold improvements, even heavy vehicles over 6,000 pounds. So it has to be placed in service before the end of the year.
Okay.
To take Section 179, you have to have income. If you don't have income, you might be able to use the bonus depreciation. What else?
Well, you're talking about something very important, which is tax planning. I mean, obviously, the idea is to pay taxes, but the idea also is to minimize your liability as much as possible.
As much as possible.
As much as possible, which without getting in risk of being audited because you want to look too cute. You know what I mean? When you're trying to minimize your liability.
But we want to take everything you can.
Everything that you're entitled to.
Definitely.
And that's why you need somebody like you to be able to be on their business side to say, hey, this is what we can plan out. This is the tax and the things that we can probably do in order to make sure that there is a strategy in place when you're generating income and how to minimize your tax liability, correct?
Correct.
Now, one thing, and this baffles me, like, for example, if you get a vehicle, just to give an example, a lot of companies and a lot of people that are watching this show might have vehicles, fleets, things like that. You said over, less than 6,000 pounds, as long as they're in service. It really doesn't matter if they're new or not, right? You can still deduct.
Okay, for Section 179, it can be new or used. It needs to be over 6,000 pounds.
Okay, over 6,000 pounds.
Over 6,000 pounds.
Okay, right. Now, question. Which I think everybody does this. At the end of the year, the infamous miles. Okay, everybody is writing miles. Everybody's having some sort of a log of the miles. Do you recommend making sure that you have good records when you're driving around in your own car to be able to expense that out in part of the company if you're a business owner?
It depends answer.
Tell me.
So if your company owns the vehicle and you're using it 100% for business, there's no need to track your mileage.
Okay.
But if you're a Schedule C, a sole proprietor, and you're using your personal vehicle, then you're going to need to track your mileage.
Okay.
If you're a business owner and you own your vehicle and you're using your vehicle for less than 100%, then you're going to need to track your miles. So it depends.
But for example, now, can you deduct the miles that you take from home going to work and vice versa?
No.
So to transit from your homestead to your office is not.
Yeah.
Why?
Everybody has to drive to work. So,
Well, yeah. But if you, so see, that's an important tip. That's Tammy's tax tip. Don't try to deduct the miles going from home to your office and go back because you might get audited.
But once you're at your office and you go to client A, then you can deduct that.
Okay.
Yeah.
But if you go back to your house from your office, it's not deductible.
Right.
So going in and going out, going in, going back, it's not deductible as long as you have your personal vehicle.
Right.
Correct. But if you go from the office to client A, B, or C, everything is deductible. Okay. Very good. What are the things you think are important for the audience to know at the end of the year that are crucial for them for their tax planning at the end of the year?
Well, if you're considering doing depreciation, things to think about are, your bottom line, how taking Section 179 or bonus will affect you. If you want to take it now or next year, because it affects your balance sheet items. So if you're looking at getting a loan, your assets are going to affect your ratios. So if you're considering going to the bank to get a loan, you need to really think about that. Plus, if you're considering to sell,
that's an important thing.
Yes, very important. If you're thinking about selling the assets too, once you take bonus or 179, your asset has no basis left. So then when you sell it, you've got a whole gain. Everything's gain, 100% gain. So
and you pay taxes based on capital gain.
You pay taxes.
See, all right. So that's why you need a tax planner like Tammy Mijail to be able to tell you when is a good idea, especially because right now we're going out of the pandemic. People are looking for loans, especially for next year, just in case they may operating capital, whatever, and they might need to put as collateral their assets of the company. And if you deduct them, you won't get as much, or you might be declined just because your assets are zero.
It's definitely something to consider.
Okay, now my last question to you: how can people get in touch with you if there are questions that they need to direct to you in case of having a session with you, kind of a conversation about tax planning for the end of the year?
Well, we have a website. Through our website, it's www.mihailcpa.com, which is MIHAILCPA.com.
I think we're looking at the screen.
Yes.
Okay.
And then my cell phone, well, let's call the office, would be better, is 281-406-8984. And my email is Tammy@mihailcpa.com, which is MIHAILCPA.com.
There you go. You're looking at the screen, folks. Get in touch with Tammy. I think it's worth the investment in at least a one-to-one conversation, because you really don't want to get angry with Uncle Sam. I think that would be a very inexpensive and unpleasant experience. I think one of the ideas of having this section on networking now is to give you very concrete tips, very important tax tips, Tammy's tax tips, so you can apply them immediately into your business. However, if there are questions, you can call Tammy directly. You have the website on the screen, you have her office phone number, and that way she can follow up with you on all questions. And now I know for a fact that Tammy has an Instagram. So if you look Tammy on Instagram and Tammy Tax Tips on Instagram, I understand you're going to be publishing a lot of stuff, so social media, to make sure that people are connected with you, right?
Yes, it's coming forward. Yes.
All right. Well, Tammy, thank you very much for being part of Networking Now. You're an amazing interviewer. You know, that's great. And, well, Glenn, going back to you in the studio.